Hey everybody, this is Colin G. Murphy. Welcome to Colin Podcasting About Real Estate, show 56. Hope you guys are doing great, enjoying your summer. I certainly am, or I certainly have. The market just keeps booming, guys. It's just incredible. No matter how long I think it's going to go up, it just keeps going further. I'm selling houses in the 230s that I thought were worth 200 when I bought them. It's just incredible. I don't know how long it's going to last, but I'm not seeing anything that shows it's slowing down. Nothing at all. I do sense there will be stuff coming down the pike in 2022 with an increase in foreclosures, increase in evictions, increase in interest rates, increase in inflation. But I tell you, the market can absorb a lot of extra inventory. At the minute, inventory is just so incredibly low. It could double or triple. You could double the amount of houses available or triple the amount of houses available to purchase. And I'm not sure it would have much impact on the pricing. I really don't. I mean, something is going to give, I think, sometime in 2022, but it could be 2023. I'm going to continue in fifth gear in terms of aggressively pursuing real estate opportunities, both in housing, suburban middle class housing. Again, I think it's a very safe asset class to target, and also vacant land. I think that's also quite a safe asset class to target. And if and when I do sense the music stopping or the music slowing, I'll certainly let you guys know. But at the moment, at the time of recording, it's all go, and I'm not slowing down at all. Let's see, long may it continue. I'm making hay, and I hope you guys are too. So my guest today, very interesting guest, quite a different guest. This is a kind of a technology finance guest who looks at real estate from a different angle, and is very interesting story. His name is Tim Milazzo. He's the co-founder and CEO of a company called StackSource, which is a tech commercial real estate platform that's completed more than $300 million of loans in a very short period of time, and it's got even more of that in their current pipeline. So they've really disrupted commercial lending, and that includes multifamilies, offices, retail, you name it. So interesting story, but a very smart entrepreneurial guy. We talked about his family's history in real estate, how he learned his tech skills working for the giants, Google and Facebook, deciding to found a business that would disrupt commercial finance, key challenges him and his business partner and co-founder faced in the early years. He got some interesting insights into how COVID affected different real estate categories. Obviously, it affected hotels a lot more than industrial, for example. And we dig into the dramatic impact technology has had on real estate in recent years. It's just something we take for granted, but real estate held out for a long time to its kind of traditional ways, but technology has disrupted it tremendously. And I've been a beneficiary of that from living overseas for many years, being able to fire in offers and use DocuSign and get video tours and I mean, there's a ton of stuff that technology has changed in the real estate market, and there's a lot more coming down the pike that's going to disrupt it even more. And we get some insights from Tim into what he thinks is going to happen, what major trends are coming at us that will affect both residential and commercial real estate from a technology point of view. He also has some tips for people that would like to improve their skills for building investor clients and in raising private money through technology. Some interesting insights there, and a lot more besides. So good insights into a fascinating industry, commercial property, but also a lot of lessons for residential real estate here, and just a genuinely interesting guy that founded a terrific business. I mean, commercial finance is not the easiest thing to break into. So Tim's a relatively young guy, his business partner is the same, and they've founded a tremendous business in a pretty short period of time. So I was happy to invite him onto the show and to share his story with you guys, our listeners. So let's head on over and see what Tim has to say. Tim Milazzo, how are you doing? And welcome to the show.
I'm doing great. How are you doing, Colin?
I'm doing awesome. Bright and sunny here in Tampa, Florida, and looks great where you are too in New Jersey, right?
I think it's warmer in New Jersey today than in Central Florida, which is rare. So we have a day with a high of like 88 here, and I think you have a cool day. Is that right?
Well, cool is 85. So yeah.
Well, there we go. We're higher at 88. So not too many times a year you'll say that.
Well, enjoy it while it lasts, dude. So listen, tell us a bit about yourself, Tim. Where did you grow up in New Jersey? Did your family have a history in real estate?
I've always lived in northern New Jersey, except when I
Hmm.
went away to college, and usually close enough where if you go up on the closest hill and look east, you see New York City. So that's the
Okay.
case right now. I am outside in this beautiful weather. If I go up on the hill over there,
Hmm.
I would see Manhattan about 3 or 4 miles east, and that
Cool.
is my stomping grounds.
That's great. And so what did your family do growing up? What kind of, background do you have?
Yeah. So my dad was a commercial real estate leasing broker.
Okay.
His job was to help office landlords and companies sign leases together that were
Hmm.
mutually beneficial. And he did that in New York City and then in New Jersey as I was growing up. And so uh, at the dinner table growing up, there were sometimes stories about landlords and how a lease negotiation went down, and
Hmm.
maybe some crazy tenant personalities, and some
Yeah.
things that I'm sure some of your listeners are familiar with, because whether it's a residential or multifamily tenant or an office leasing tenant, they're human beings, and human beings are pretty interesting users of real estate.
Yeah. No, that's for sure. And then, so what was your education like? You sounds like you're more on the technology side of things. Did you study technology in university?
So I studied finance at Liberty University in Virginia,
Okay.
and I interned for big finance and real estate companies while I was there. So I interned for some of the biggest brokerages, and frankly, Colin, I never thought I would be in real estate full time as a career,
Hmm.
because I saw it from a brokerage perspective, where it was really about great salespeople, and relationship building, and calling and endless phone calls. And
Yeah.
I was always really interested in technology. As an intern, the role I played was the smart spreadsheet kid in the corner. Um,
Yeah.
and I was really good at that. I'm very analytical. I loved tech, and figuring out how are ways that we can automate something. And so when I came out of school, I worked for big tech companies for several years in advertising technology. So I worked for Google in New York City. I worked for a startup after Google that ultimately got bought by Facebook. Uh, the way those companies make money, all of them, is through advertising online and ways to automate advertising online that uses data. And the only reason I got back into real estate, not the only reason, but a big driver, was that I
Mhm.
saw the opportunity to bring tech and real estate together, and
Yeah.
to together in a way that would be really beneficial for real estate investors. And we really keyed in on, my co-founder and I, the commercial real estate financing market. We live in a day and age today where you can get an instant mortgage quote for buying a residential asset if you're a home buyer. But if
Yep.
you're a real estate investor, getting clarity on what are your financing options is actually quite difficult. And so that's the problem that we've been attacking with StackSource. People that are trying to find the best financing option without killing themselves and using all of their hours to do it.
Hmm. Yeah, it's brutal and it's incredibly time consuming, and once you have the connections, it's a lot easier to get your fifth and sixth and seventh deal, and the first few are torturous. So yeah, I applaud any company that's trying to make it easier for people just to get started, because you're right, technology, real estate probably one of the last big holdouts for technology, right? In terms of just the size of the industry and how long it took to get disrupted.
I think it's changing, but there are reasons why real estate will change slower than other industries. And one of the reasons is the transactions are slow and they're multi-year process.
Hmm.
Um, and I'm not just talking about how slow a closing is, though that's certainly a worthwhile problem to address. And if you have a lender that holds up your closing, you know how painful that can be.
Hmm.
But I mean, you talk about the investment horizons on these assets being years. So putting technology in a building or in an asset is something that you plan for years. Using technology to run your portfolio, or using technology to make a better decision about a real estate investment, talk about it being a multi-year process. And for that reason, I think real estate is a little bit slower to adopt, but it's really changing. There's a lot of investment going into real estate tech, or some people call it prop tech, property technology. There's a heck of a lot of investment going into fintech, financial technology. So I think these things are worth paying attention to if you're a real estate investor to try to maximize the investments that you're making.
It is, and it's, sometimes a change happens and you barely notice that it's happening, but you look back 5 years and things have changed incredibly. I mean, I've interviewed kind of old school guys on the show who used to analyze listings from the MLS on a kind of a phone book that they got in the mail, twice a month, and by the time you read it, it's already out of date. I mean, so what would you say have been the biggest, changes in the industry in the last 5 years that technology has caused?
There's a lot of talk about prop tech meaning a lot of different things. Real estate
Mm.
tech. You can mean uses of real estate, and that would be a super worthwhile discussion because office leases, like my dad used to strike, used to be
Mhm.
10-year leases, and that if you want, you had to take a certain amount of space. You weren't getting into a building. Now you can walk into a building and rent a desk for a month, and that's something for office leasing. Um, the uses of real estate are becoming more flexible.
Mhm.
The way to analyze real estate, there's an interesting one as you talk about MLS data and trying to analyze more and more properties. There are a lot of investors and it's a competitive market. And there's a lot more people making investments out of state and cross market because
Mhm.
you have access to more data at your fingertips. I
Mhm.
think 25 years ago, there was there was a very, very low percentage of houses and multifamily assets that were owned by people that weren't locals,
Yeah.
because you needed to talk to everybody locally to even get an idea of what was happening in the market. I think data is a lot more accessible now. Now, it's not always free. For certain types of comps and for data or for vacancy rates, you may need to pay CoStar or pay somebody, but the availability of data has seen a huge boost and will continue to see a huge boost with the types and availability of data. I think you see a lot more cross geography investors. We get a lot of users of the StackSource platform looking for financing options because they might live in California, which is a very high cost state, very
Mhm.
low cap rates, and
Yep.
they may be buying an asset in the Midwest. And there's no way they know who the relevant lenders are, and they could also use a helping hand of someone that's very familiar with that market. And I think that's much more prevalent today.
Yeah, it's true. I mean, yeah, you forget how much options we have that literally weren't available even 10 years ago. Um, and just little, so even like DocuSign just revolutionized making offers, for real estate that was so difficult 10 years ago. And I remember the first time I used it, it was just incredible. And now, yeah, you're right. I mean, I take owning properties out of state for granted. But yeah, I guess my father's generation, it would have been very unusual to buy some multifamilies in Ohio if you lived in
Yeah,
Florida, you know?
absolutely. And I have a house under contract in Central Florida,
Hmm.
and there's no way I want to. It doesn't cross my mind that I'm going to hop on a plane for a closing. That's going to be a digital. I mean, both digital closings or just like mobile notaries, and um, I mean, honestly, it's about digital closing at this point. That's there are things that we take for granted that were innovations 10 years ago. And I think it's going to
Hmm.
be the same in the next 10 years or even more. And so knowing about those things early could give you a leg up.
So what do you think there are? What big trends do you see coming down the pike that you can share with us that would be of interest to investors or that might be shaking up things in the near future?
Yeah, some of them are market specific. I would say if you're investing in very dense markets like a New York City or a Chicago or a San Francisco, and those markets are struggling since COVID, right? But
Mm.
things are gonna retract a little bit, right? There's the rubber band can only go so far. It's gonna come back a little bit. But if you're investing in very dense markets, I think of uses of properties like co-living properties for a multifamily asset rather than renting by the unit. Can you rent by the room and actually
Hmm.
squeeze more income out of a property that way? That's something that's very fascinating to me. And then the tenant management of that and the lease management becomes very important, and that's a technology driven kind of innovation. Um, I think if you're investing in less dense areas, things like that we're doing that can expose you to other financing options beyond local and regional banks, where we may know a credit union that's not even in your state that may have an aggressive loan program for a multifamily asset in a tertiary market that you're looking at, and you can get a lower rate on your commercial mortgage. that can end up boosting the IRR on your deal. There's so much data, uses of buildings, and the way that you manage and invest. There's so much there. We're really looking at the way that you manage your portfolio and invest, and how can we make that less painful and more effective.
Yeah, I love it. And yeah, you're totally right. There could be some credit union in Georgia that would lend to your multifamily in Tampa all day long, but you need, they're hard to find unless you got the tech companies like StackSource to tell you about it. You
Unless you
mentioned
like
that.
to make 75 calls. And even
Yeah.
then, even if you're making 75 calls and you happen to talk to the same credit union in Georgia, are they going to give you the same priority that a platform that's sending them the next potential 20 deals they want to work on? Probably unlikely. You can brute force your way through these things, but brute forcing your way through some of these things is probably not the best use of it. I mean, we're all in this because we want passive income, don't we? I mean, are you going to brute force through calling 70 different lenders to find that one that's most aggressive?
Yeah, and it's exhausting and very time consuming. And you're right. The kind of entering into a battle of wills to get where you want in business is kind of the hard way of doing it. I've found the hard way as well.
Do
So
more deals instead.
yeah, you mentioned COVID earlier having an impact in the densely populated cities like New York and San Francisco, and obviously totally can see that. But how did it, how did it affect commercial real estate in general, or can you even say in general? Because obviously residential at the minute is going gangbusters in most kind of non-dense, suburban markets. How is it affecting, real estate? Because that's your main business. I mean, what have you kind of been seeing?
Yeah, there were winners and losers, not only in different markets based on density, but there were winners and losers based on asset classes. I mean, if you owned some highly leveraged hotels last year in dense markets, I feel sorry for you. It's not your fault that there was a coronavirus, but you're taking the brunt of it as far as your income and the value of your properties. Retail has had to reinvent itself because of e-commerce. Then it had to reinvent itself again because people couldn't get to in-person stores, or they had to wear a mask, and retail was heavily affected. Multifamily is still at this historically, while there are kind of interim challenges of did my tenants lose their job or their business, and can they pay rent? And then there's all this turbulence about the government, helping people or saying that you can't kick out people until they get help. There was some turbulence. But when you get through the turbulence, multifamily is still one of these historically great seasons of investment opportunities if you can find the right deal, because multifamily properties are pretty expensive right now on a cap rate basis. But there's a reason they're expensive on a cap rate basis, and that's because there's tons and tons of demand. People need places to live, and it's expensive to build places to live. There's people having babies, the population's growing up. Multifamily is this historically great investment. So it's a tale of different asset classes. You need to think.
You see hotels and retail doing, next year? I mean, are the prices of those assets gonna fall? Are people just gonna hang in there, and it's just gonna be a sluggish market for a while? How do you see that going?
Oh man, there's a $1 billion question.
Yeah, literally, yeah.
If anybody knew that, I'd invest with them in a second. There are some trends, right? First thing is, can tenants pay rent? And if they can, then you can drive income in the property. And so, can these places open? Do people still want to go to places? In some states, you still can't go to a restaurant indoors or above a certain capacity. Let's assume that coronavirus. You have to decide whether you're assuming coronavirus is going to be gone or whether it's going to linger, and that determines the value, because it determines whether there can even be income on a retail property. That's the first thing I think of. I think in markets where you have retail that's reopening with strength and it's not going to get closed back down, it's a great investment opportunity. If you can time, this market is going to reopen at full capacity, all of their retail and all of their schools. That's a great investment opportunity if you can time it right. And if you know what's going to, happen from an income perspective, that's the majority of the battle.
Yeah, you're right. It's just there's so many unknowns, and the big one being when how long is COVID going to linger? What restrictions are going to be in place? You can say the same thing about airlines. And yeah, I mean, I guess residential is like you say, it's a lot simpler. People always need a house to stay. I mean, in the early days of COVID, people were thinking multifamily was going to completely crash and burn. But as you say, once you get through the turbulence, it's turned out to be as stable an asset as a bunch of single family homes, really.
Yeah. I think there's a bit more stability, though there's no guarantee. There's no guarantees ever in real estate, but there's more
Mm.
stability in, do people still need a place to live next year? Yeah. Are they going to be going to that particular restaurant or having that particular experience in retail? Unknown, unknown.
Yeah.
And so I think you can win. You can make a bigger killing, or lose more money too in retail.
Hmm. Yeah, that's it. It's yeah, don't be putting all your chips on retail, I guess is take a little put a little punt on it if you
Unless
have
you're
an
okay with the
insight.
risk. You probably
Yeah.
have some listeners that are all about risk adjusted returns or absolute returns instead. And you know what? Go look at retail. Do it.
So tell us about what your company StackSource. It looks like you founded this really interesting company. It sounds like at quite a young age with a buddy of yours. Tell us how that all came about.
Yeah, spot on. That's exactly what happened. So I've got a co-founder, Nathan. I'm Tim. I'm the co-founder and CEO. And we saw this pain point for knowing your financing options being like way too hard, way too exhausting. It's a black box. I mean, even if you're calling a broker, what is that broker doing and what lenders is he calling? And why can't you know that? Why can't it be faster? In a day and age where Rocket Mortgage is worth $40 billion, why is commercial financing so hard?
Hmm.
And that is the problem that StackSource solves. So we're a platform where you can input, here's the property address, here's the type of transaction. I'm acquiring this for commercial properties, for anything that would lead to a commercial mortgage rather than a residential. So we pick up at multifamily, 5+ unit,
Hmm.
and anything that has a commercial component, office, retail, industrial. Industrial's having a great heyday too, next to multifamily. Um, we try to line up, here are all the financing options, get those lenders to compete for your business, and you get quotes back on the platform in a way that you can compare and analyze them and figure out what's best for your deal.
I mean, it sounds like a fantastic idea, and it sounds like it's something that would solve a lot of problems. But I'm just scratching my head is how on earth do you actually get that set up, get
Yeah.
the traffic to your website, convince all these lenders to pay attention to the packages you're sending them in your format and approve the loans. I mean, it sounds like it's a mountain of work.
Yeah, it's definitely not as simple as just putting up a website. You've pointed out some of the things that are key, right? Credibility with lenders, and is my lender going to pay attention to this one, or even are they going to put their best foot forward if you're coming from StackSource versus walking into a local branch? These
Hmm.
are all things that were not a given that we really needed to build into the business. So we're no longer at the very beginning stages, and I guess that maybe shouldn't be a point that's lost. StackSource has now arranged more than $300 million in financings, successfully
Wow.
closed, and we actually have more than that in our pipeline now.
Wow.
Uh, so we're growing fast. We're like going to well more than double our originations this year over last year, which was like a COVID affected year, but even then was a year of growth. So we're a few years into this, and we help a lot of multifamily, retail, and office property owners get the best financing options for their deals.
Hmm.
Um, and that 300 million number is actually not that big compared to the $3 trillion market size here of commercial mortgages in the U.S.
Hmm.
But we're growing. We, part of the secret sauce is that it's not just technology. I have a really good co-founder who's a software engineer that worked at Google that has built some really great technology to make the process easy and to make it fast.
Right.
But if it stopped there, the lenders wouldn't be as engaged. Uh, we have capital advisors that have all been lenders or mortgage brokers in the past in their own right without the technology that engage on every deal and act as the guide for these borrowers and actually, boost the engagement with these lenders because they're working on the deals to make sure that they're getting the best financing options as well. So it's both. It's, we are a service and a technology platform kind of fused together to try to make this process as effective as possible for real estate investors.
Okay. And how did you get your first 10 clients? Who were your kind of guinea pigs, the investors that you're kind of had to twist or come on, just use the platform, see, apply for a loan for that deal you're looking at. How did you find those guys?
Well, we had to do it on both sides. We had to do that with lenders and with
Hmm.
borrowers. And so the answer on the lender side was to get our first 10, 20 lenders so that at least there were some lenders to match to on the platform,
Right.
uh, was me on the phone calling 100 of them, and 15 or 20 of them willing to give it a shot based on our sales pitch of, hey, this is going to be great someday. It's going to be a huge source of, leads and relevant leads for you. And I kind of had to learn not to oversell it. Just you get to this point where you just say, hey, I have a deal for you, can I show it to you? And you do a little
Hmm.
dance of like back and forth between the borrowers and lenders until like you have enough of both. On the borrower side, putting up the platform, getting it out there. We entered in some startup competitions, like in front of audiences of real estate professionals on, hey, this is something that's going to change the industry,
Oh,
and
wow.
you should come and pilot it, as well as some online. We come from an ad tech background and working some
Hmm.
digital marketing and organic, kind of online channels both. So our first ever borrower that successfully closed the loan was a small business in rural South Carolina
Okay.
that needed a loan. So they were a tenant in a building for like 20 years and they wanted to buy a building. And so we hooked them up with a lender in Georgia. Here we go back to the niche lender in Georgia,
Okay.
um, that was able to provide them a $400,000 loan at acceptable terms that they went through the process and closed on.
Very cool. So let's say I'm looking at a 20 unit complex, in South Carolina. So I can input the details onto your website. I guess you go through a similar kind of template, and then that gets sent to a bunch of potential lenders, and do they have to analyze, do they have a certain length of time to analyze your application and put a response to your website?
Yeah. Oh, it's so much more fun today. Because today StackSource has 700 lenders plugged in,
Okay.
waiting for deals of various shapes and sizes and locations. So there are 70 different criteria that we filter a deal through to determine which lenders are a match. And some of them are
Okay.
ones you might expect, like the geography of the asset. Giving us the property address tells us more than you know in being able to filter that down to the right lenders. And the acquisition price, and like you said, the characteristics, the 20 units, how many of those are occupied, and what's the current income. And some of those, that a lender's looking at these. And some of them might be criteria that you don't quite realize that we're using to actually get you the right, like, algorithmic match of, out of the 700, here are the 14 that are the most likely best loan for you. And some of those lenders are then going to manually review that and quote, like if they're a local bank that, they have a loan officer that's going to manually review in the next couple of days and submit a loan offer. Some of it is even more fun, where if it, for instance, fits in the guidelines of the Freddie Mac small balance multifamily loan, we can give you an instant soft quote indication on the platform, even
Great.
before a human review. Now, the human underwriting is to determine, were you BSing us on that income number, and are you actually going to get approved for that loan? That's a different question. But as far as
Yep.
getting your instant rate and soft quote, and how, what leverage point can you be at, and everything you need to put together your offer for that building, we've automated that.
That's amazing. So you can get a handful of automated quotes straight away once you put in those 70 criteria, and then maybe a couple more, which have more of a human analysis afterwards.
Yes. Some multifamily deals of 20 unit nature, you're going to talk with one of our capital advisors after an instant quote, and it's going to be, let's not waste time. Like, the Freddie Mac option is the best option for you, and we can write to term sheet. It's 80% leverage, it's non-recourse, it's at 3.71% fixed, and that's exactly what you need. A local bank is not going to beat this. Sometimes you're going to talk to our capital advisor, and they're going to say, listen, if you can stomach a full recourse loan, so you're putting more of your own finances at risk, we can
Hmm.
get you a 3.1% rate from this bank over here, and we're going to have these three banks and credit unions compete, and you can put up together a full menu of financing options. That's the type of conversation you can have with a StackSource capital advisor to say, you know, whether or not you're eligible for an auto quote, and some deals are and some deals are not.
Fair enough.
Is it
Yeah.
is it worth the extra few days to source a few more quotes?
Okay. And so where, how do you guys get paid? Do you get paid on the applicant side or on the lender side or both?
Well, if you take that fancy auto quote, you pay us nothing. That's worked into the economics of the deal, where Freddie Mac, for every loan that is made for like the Freddie Mac small business program, like the people that put together the loan, participate on those economics. And that's the same thing as if you were talking to any other Freddie Mac lender that doesn't have our auto quote. It's not going to be any more expensive, and you don't have to pay us a thing.
Mm-hmm.
If you're talking about getting a full menu of financing options from our network of banks and credit unions and debt funds and our life insurance companies and the types of lenders that we have a great relationship with, and we can get you the very best loan, but it'd be a
Mm-hmm.
service. StackSource takes a small fee at closing. Typically, for like a 20-unit multifamily, you're talking about 1% of the loan proceeds.
Nice. Nice. Sounds like a fantastic business. I love it. And I take my hat off to you. So what kind of, what kind of tips can you provide? I mean, you've gone through the ringer here, getting this, using technology, dealing with finance, dealing with investors. What kind of tips might you have for people a little further down the food chain that want to use technology better to raise private money for some of their own deals, or maybe just generate more investor leads?
So whether you're a business owner building a tech platform like me, or whether you're a real estate investor and your aim is to build your portfolio, we have a couple things in common. We're human beings that would like to have 24 hours in our day. We'd like to get a few hours sleep. We'd like to see our kids. We would like to make money with our working hours. And if you're happy to own one or two rentals, and that's what your real estate investment strategy is, and you're happy with that, you may not need to find a lot of tactics to scale. But if you'd like to scale, if you'd like to make more money with that time, if you'd like to own a larger portfolio, you have to find the things that are, is it uniquely me? Is it my expertise, my opinions, my effort is going to add that value? And if it's not, you need to figure out, are you getting somebody else to do it? Whether that's an assistant or a vendor or a broker, or are you automating it? And I probably lean really heavily on the automation. Can our platform do this math over and over? If you're a real estate investor, can my underwriting model figure this thing out over and over again? Can it source the data? And that's really the way to scale, I think, whether your business is real estate or whether your business is real estate services like me, or whether you're in another business. Decide what are the things that you're great at that are going to make your business great, versus shed everything else. Use an assistant, use a technology platform, build a technology platform. I'm building a technology platform for this. And I think that's the only way to scale if your ambitions are higher.
Yeah, I completely agree with you. And I was, one of these guys who was running myself ragged for years and years and years, just trying to juggle more and more balls every year. And until eventually I met some smart people at a mastermind that said, what can you like what you said, what can you outsource? So do it. What can you automate? Do it. What are the 10x things that you can do? We'll double down on those and outsource the rest. And just by doing that, it's you can do more with less time. It's just amazing if you can flick that little mind switch, and technology's got a big part to play in the automation side.
Yeah.
I love it. So listen, this is really interesting. I've really enjoyed this conversation, Tim. But before we wrap up, what are you working on at the minute? What kind of exciting thing you working on now? It sounds like you're always kind of ahead of the curve a little bit. What are you doing?
Life wouldn't be exciting unless we were trying something new. We
Mm-hmm.
love trying something new and innovating at StackSource. The auto quotes are brand new. Those are within the last few months, and we're expanding access to more loan programs through auto quote. We also have a tool where you don't even need to come talk to anybody at StackSource. You don't even need to tell us who you are to get access to those auto quotes, because we have a browser extension. So if you're using Google Chrome, we have a program you can install that attaches into it. And then any commercial or multifamily investment listing that you're looking at, whether that's on LoopNet or Crexy or on another listing portal,
Mm-hmm.
you can click a little StackSource button that pops up, and you can source instant financing quotes that then plug
Wow.
into the property listing. So that's pretty that's brand new for us. It's still like in beta testing, but we have a couple hundred people that have now downloaded and tried this, and we're making upgrades based on their feedback. That's something that's brand new for us that we're really excited about is, even more a step of transparency. Can we take this financing engine and this financing, kind of platform we built, and can we make it work even outside of our own platform, so to speak? So we've made this new browser extension, and that's something we're very excited, and it's in early stages.
Wow. Yeah, sounds fantastic. You're looking at a deal on LoopNet. You can click a browser extension and get a finance quote. Yeah, that's really cool. Yeah, I like that a lot. I'll download that extension and check it out.
We love your
Thank you.
feedback, Colin. Yeah.
Yeah, well, listen, I really enjoyed this. Thank you so much. I'm going to let you get back to your work now, but how can people learn more about you, Tim, and how can they learn more about StackSource?
Yeah, StackSource.com has a lot of the stuff we're talking about, whether you want the free extension, whether you want to talk to us about actually financing. My email address is really simple. It's tim@stacksource.com. And I'm active on LinkedIn. I'm active on some multifamily Facebook groups. I'm active now on Twitter, as I should be as like a startup CEO, and I've kind of adopted that. And so tim@stacksource.com, any of those three social networks, I'd love to respond and chat with people. If you're working on something interesting as far as a real estate investment, a prop tech platform, I love to chat.
Brilliant. I will get all that on the show notes, Tim, and thanks again for sharing your story.
Colin, thanks so much for having a platform here for real estate investors, and thank you so much for inviting me on.
You got it. There you go, folks. That was show 56 with Tim Milazzo. Hope you enjoyed it. I thought that was a very interesting story and a fantastic business. I'd love to keep an eye on that and see where it goes. I can certainly see tremendous potential for this to become a major business worth hundreds of millions of dollars. It's commercial finance is just such a massive market, and if he can just get a tiny piece of that and get some fees on it on each transaction, I mean, it's an incredible business, and I take my hat off to him for founding it. I mean, buying and selling single family homes one at a time is a piece of cake compared to trying to get into that world of all these massive commercial lenders and the types of investors that are buying these 10, 20, 30, $50 million deals. It's pretty cool to know that a couple of young guys can found a business like that and scale it up. So good on him. And I appreciated his insights into the industry and the technology trends and how COVID has impacted the business and future trends and interesting things he's working on. Pretty cool story. I hope you enjoyed it. Interesting guest for me. I love talking to these kinds of guys. I'm delighted to have a platform for doing it. I'm a pretty curious person by nature, so I love spending 40-50 minutes with these guys and usually staying in contact and with them afterwards as well. I've often followed up with guests to ask them follow-up questions or to ask them advice on some stuff I'm thinking about or planning, and vice versa as well. So very cool. And thanks again to you guys for tuning in and listening. Really appreciate it. If you haven't left me a rating or a review, I'd love that. I'd consider it a big favor. Even more so if you see me on social media promoting a particular episode that you enjoyed, please do share it with your own audience if you think they would appreciate it. That is a fantastic way of me expanding my audience to a wider group of people. And finally, I do have my website, colininvestments.com, COLIN investments.com. You'll find some additional resources there. You can get on my mailing list. You can access previous podcasts, videos, and there's 4 or 5 real estate reports that I've written myself that you can download for free. So check it out. But aside from that, that's it from me today, guys. I will be back very soon with show 57. But until then, this is Colin G. Murphy signing out. Take care. Bye-bye.